Paul's coming on today, as he always does, and he's going to share some fantastic information with us. And today, specifically, a list of documents that are needed when completing a mortgage application, right? As well as the minimum job history requirements for the income to be used to qualify for a loan. There's so many questions involved, Paul, with like when buyers are coming in, what do I do? What do I bring? What's the lender going to need? And there's so many moving parts to the transaction. So I'm glad you're here with us today to let us know, what that is.
So yeah, I mean, obviously, great, great topic. I think in this market, relevant. I mean, everyone always asks, all right, well, I want to get pre-approved, or I want to, complete an application. I'm ready to go. What do I need to do? Well, it's not necessarily what you need to do per se. It's what documents we need. What do we need in order to, properly vet you and make sure the numbers work so that underwriters will approve the loan. And people say, what documents do I need, or what do I really need? And I hate that. What I really need. Well, you need everything, because I can't just pick and choose what I need in order to qualify you. So first and foremost, we need your license. We need to make sure you're here, or your permanent resident alien card to show who you are, your address, your name, your date of birth. We also need your social security number. Ideally, I'd like to see a social security card. But if that's not available at time of application, maybe even, tax returns obviously have your social on it, so that would suffice. Those are very basic 101. But then what else do I need? Well, I mean, we always need assets, bank statements. We need to see where the money's coming from for a down payment or for your closing cost, or in some cases when you need reserves. So they say, well, what do I need? I need 2-month statements. When I say statements, you just can't take a screenshot of your cell phone and text it to me. I mean, yes, in theory, I could say, look, you have that balance, but I need to see the statement so I can see the cash flow, or see, your expenses each month, the money coming in and out of the account. Because underwriters are going to ask to see that. They want to make sure this money's been there for a while. There's no large deposits. So 2-month statements, and, what type of documents? Checking account, savings account, maybe even a 401k, or potentially a CD, wherever the money's coming from. So, and people always say, okay, well, can I just send you the first page? Well, yeah, you can, but eventually we need them all, because we're going to see the whole entire, transaction history for the month. The underwriter is going to ask for that. So that's important, assets. We also look at, Emilio, let's be honest here, income. It's paramount. You need to have enough money to, make enough money to qualify to still pay your bills and live. So when I say income, what do I need there? Well, if you're a self-employed borrower, someone who has your own business, I'm going to need 2 years of tax returns. People say, well, what can I do if I only have 1 year? Well, there's some cases where we can actually go 1 year, but 2 year is the ideal. It's what we need in this market, especially for traditional products. Let's be honest, with the end of 2024, we got another 2 weeks or so left. And then most people thinking, okay, tax return time. So if you're self-employed right now, listen to this. You should think about it. We go a 2-year average, but guess what? If the numbers aren't quite there yet, then we can look at, okay, well, let's look at 23's numbers, and then 24, we have a good idea of what we need to make it work. So you have, right now you're filing your returns in the next, say, 2 or 3 months. It's the perfect time, because we can get that going instead of waiting a whole nother year. So we can get this going in February, March when you file your returns. Now we can take a 2-year average, help you qualify for a loan. And some people ask for advice. I can't tell you what you have to claim, but I can tell you what it takes to get a loan of this size, or, based upon your income, what you need to be at to qualify for a certain house. That's what I always do. I give advice. I can't say you have to claim this much, but, you have to claim what you make. But, sometimes write-offs, like you said, you can minimize your write-offs at times to show more income if need be.
Would you suggest that they go at it now, or they wait to file later?
Yeah, that's a good question. I would say go at it now. The reason being is, if you do file, let's say you're 24, let's just throw numbers out here. Let's say you owe $20,000 to the IRS and you file your 24s. Now, unless you can pay that day one, which some people can, but if you can't, now you have to establish what's called a payment plan with the IRS. And that payment plan, let's just say it's, $1,200 a month or something. That $1,200 a month needs to be factored in your debt to income ratio. So it could affect your buying power, decrease your buying power in most cases. So if you can get it done with the income you have, 22, 23, say, being self-employed, and knowing that, you're probably going to owe in 24, you might want to go that route and get it done now, because, you have until April 15th or even until October if you file the extension. So I would say, yes, do it today if it works. If it doesn't work, then you're going to have to, obviously deal with it, and run numbers after the fact. But yes, ideally use what you have today if it works.